Africa's biggest coal and oil producer, Sasol, reported an 81% jump in interim headline earnings per share. The SA Energy division recorded the biggest rise in operating profit, helped by a 35% increase in the average crude price and a 7% weaker rand to dollar exchange rate during the period. Earlier, Samantha asked Christine Ramon, Group CFO, how the company managed volumes in this favourable macroeconomic environment.
However, one has to produce the volumes to be able to realise the positive impact of the oil price and the weaker rand. So we certainly saw a very solid group operational performance, although Synfuels volumes was actually down by 1.3%. It was certainly contained. Very swift action was taken by management to contain the decline in the volumes at Synfuels. But we also saw our international operations, in particular the Oryx GTL plant in Qatar, as well as our Area Sasol polymers plant in Iran, that contributed favourably to volumes. And in total, both the positive contribution of Aria's volumes as well as Oryx volumes offset the decline in gross margin value of Synfuels volumes. So a very solid operational performance as well.
When we talk about overall operating profit margins, you're sitting at 24.6%. At June, it was around 21%. So you've seen a gradual improvement there. Talk to us about your strategy around managing margins in light of the fact that you actually manage volumes to optimize your margins.
Absolutely. We saw very good margin expansion. If you compare the 25% margin compared to last year, we were able to expand margins by 7%. I think clearly our South African energy business has been a key contributor to that, but very key to one of our strategic initiatives going forward is margin improvement. And so in particular, our chemicals business, which really was under pressure in terms of prices. Global prices are under pressure. And what they actually did very well in even expanding the margins in tight markets, very pressured global markets, and were in certain instances able to pass on higher oil-related feedstock costs to their customers. So we've got a strategic initiative in our group, planning and optimization, as well as sales and marketing excellence, and it's really on focusing on expanding margins and placing product in pockets where we can actually achieve those higher margins, and it could be in niche markets, in particular in the chemicals businesses.
In terms of where the oil price is sitting now, if we're looking at the energy business, sitting above the average oil price during the interim period, it was trading above $125 at one stage on Friday. To what extent are you hedging prices at this level? Because just looking at the balance sheet, you managed to net 50 million rand, which is pretty much a small value in terms of your hedging contracts. But to what extent are you going into the market and hedging these levels right now?
We are not hedging at this point in time. We believe that there is significant potential upside to the oil price given geopolitics. And certainly taking into account our risk management strategy in particular, we've got a very strong balance sheet and potential upside to oil price. We do not believe that it's appropriate to hedge at the current time.
You've mentioned Iran, and we can't ignore the fact that there's a lot of pressure on a company like Sasol with regards to its operations in Iran right now. What is Sasol's stance with regards to its current JV that you've got there on the chemical side of the business, and also with regards to looking for new oil outside of Iran?
Yes, we did say in announcements that we are looking at potentially diversifying our crude oil procurement from Iran, and that is underway. I think one has to take into account that we currently procure a relatively small amount of crude oil from Iran. It is less than 20%. And I think that's all I can say at this point in time. You are aware of the fact that we're looking at potentially diversifying or divesting of our Iranian operations, and there are discussions underway. So we need to be sensitive to the fact that there are commercial negotiations underway as well.
A lot of money and a lot of focus going into diversifying the energy sources and energy capacity of Sasol going forward. You spent 24.4 billion rand during this period going forward. The next 2 years, 61 billion rand in 2012 and 2013 combined. Give us an idea of the priority areas when it comes to capital expenditure during this period.
I think quite importantly for the next 2 years, like you said, 61 billion rand over the next 2 years, we'll still be spending about 2/3 of our capital expenditure in South Africa, and roughly split between chemicals spend in South Africa as well as in the South African energy business. In the South African energy business, we are growing synfuels. There's a synfuels growth program that's taking place there. We're also doing some mine replacement programs and building a mine for the export market as well. So on the chemical side, we've got a big wax expansion project out in Sasolburg. And on the new energy side in South Africa, we are also building a 140 megawatt plant in Sasolburg for increased electricity generation, and that will take us up from the current capacity of 50% to 60%. I think roughly over the next 2 years, we'll also be spending approximately 25% of our capital expenditure on international projects. And that includes the Canadian development costs as well. Some of the other international projects are in Uzbekistan in particular that we'll be spending on in the next 2 years.
Just give us an idea of where these projects are in terms of, you'd mentioned Uzbekistan, you mentioned Western Canada. You're looking at a gas to liquids plant in Western Canada right now. You're currently drilling with regards to shale gas there. So let's kick off, I suppose, with Uzbekistan. Give us a progress report on that.
Well, Uzbekistan is currently in the implementation phase. So we've actually completed feasibility already, and FEED, as we call it, which is in the implementation phase, that will take approximately another 12 months. So we only expect to make an investment decision after that. So in calendar year 2013, we should be there. It's progressing very well. And I think the idea the idea of actually doing FEED is to actually give us comfort around the capital costs of the project, but we also will be project financing that particular venture, and that will all be wrapped up by the time we actually move on from an investment decision perspective. The Canadian shale gas developments, yes, there's expenditure relating to that, and certainly you can expect increased expenditure in that going forward. We've had to pull back for 2012 to do some more de-risking of that particular area before we decide how to proceed there.
Shale gas is a big question mark in terms of environmental impact right now. Is that something that, as you become more and more involved in fracking, is that something that you're starting to find that the unknowns around the environmental impact are a big concern?
I think it's more unknown. The impact of it is more unknown in the South African environment. In the North American environment, and in particular Canada, where we actually made our investments there, we had to get, and I certainly can tell you that I'm actually sufficiently comfortable relating to the environmental impacts of that. I think what plays quite a lot into it is the fact that these gas fields are situated near the 6th largest freshwater lake in the world. And we were also comfortable with our partner. They are the operator of the asset, and we were comfortable with the environmental issues that were actually considered when we made these acquisitions. And I can say that yes, I don't have any concerns about that.